Hello and welcome. You have tuned into Market Cafe right here on ET Now. I'm Srishti Sharma and with me is Kanishka Sarkar. And viewers, this is the show. In the next 1 hour, we get you ready for the trading action on the Indian markets today. We'll start with what's really happened in the global markets, and along with that, since we are at the flag end of the earnings season, how the earnings season is seen to be shaping up, we'll deep dive more into that. But Kanishka, first up, let's talk about the US markets. Quite an interesting move yet again, but what a fall in Nasdaq.
Absolutely, very heavy selling is what we saw. We saw a very sharp, fall with all the major indexes, including the Russell 2000 posting its worst day since October 10th. The Dow dropped about 800 points, or about 1.7%. That is erasing all of the previous days' brief push above that 48,000 level. In fact, the Wall Street saw its worst day since October 10th sell-off. That's the word that's reflecting on the Wall Street. Tech, of course, like you pointed out, led the sell-off. The Nasdaq is on track to break its 7-week winning streak. This as Nvidia, Broadcom, and Alphabet, they've fallen very sharply. Fresh worries of around the AI trade. They're triggered by Oracle's steep slump and concerns over stretched valuations and soaring AI capex. Now, this has pressured the sentiment across the sector. Other than that, there's rate cut expectations, which have also cooled now. So now markets only see a 52% chance of a December Fed rate cut, down from nearly 96% a year ago. Well, the end of the record US government shutdown, that has added to the uncertainty, with the White House suggesting that some missed the economic data may never be the economic data that was missed over this period may never be released. That's a potential setback for the Fed decision making. If you talk about the indices, how they have performed for the week, now week to date, S&P 500 is up about 0.1%, the Dow about 1%, whereas the Nasdaq, that is about down about 0.6%. So yes, very heavy selling is what we saw on Wall Street, but Dow is sort of managing to hold on to slight bit of gains when we compare it on a week to date basis, Srishti.
All right, so that's about the US check. But with this, let's also tell you what's really been happening within the gold and the crude front. The crude is seen to be rebounding a bit. As of now, it's a 2% jump is what we are getting to see on Brent oil as well as WTI crude. Brent is now trading and hovering around that $64 per barrel mark. So that's a good move coming in on the crude oil front. And along with that, when it comes to the gold prices, they are seen to be declining a bit now that the gold has slipped below that 4,200 per ounce mark. So as of now, it's actually seen to be having a cut of 0.3%. But yes, the profit taking did hit the gold, but it's still up almost 5% if we have a look at the week to date basis. So that's about the crude and the gold markets, Kanishka.
Absolutely. So that's about the commodity market. But let's keep it going with more updates that we have coming as far as oil is concerned. Now, Russia's oil and fuel export revenues, they've slid again in the month of October, dropping to $13.1 billion. This as both prices and shipment volumes, they weakened. That's according to IEA. Exports fell 150,000 barrels per day to 7.4 million barrels per day, while production that has stayed steady but slightly under OPEC plus targets. US sanctions are also tightening with the November 21st cutoff for dealings with Rosneft and Lukoil. Ukrainian drone strikes on refineries and pipelines, they also contributed to lower exports, and that's pushing crude shipments just above 5 million barrels per day. So yes, that's the latest we are picking up on Russian oil and fuel exports.
All right, but let's talk about China, as it says that it has successfully completed the first phase of its 6G trials, a milestone in a 4-year testing campaign. Now, the Ministry of Industry and Information Technology says more than 300 key technologies have been developed, calling the progress a foundation for a full 6G ecosystem. Now, the next phase targets breakthroughs in the core tech standards and industrialization.
That's right. Now let's shift focus to the auto sector. Now Toyota is recalling more than 126,000 Toyota and Lexus vehicles in the US. That's over an engine defect that could cause engines to stall while driving, raising crash risks. Now, federal regulators say that the leftover machining debris from manufacturing can contaminate select engines. Owners will begin receiving notices on December 22nd, with free repairs provided once a fix is finalized. The recall expands a similar 2024 action involving more than 1 lakh vehicles.
All right, and In more news and updates, it's Tencent that posted a strong quarter with revenue up 15%, powered by gains in the AI, gaming, and ads and social platforms. Tencent upgraded its AI model and continues using DeepSeek to boost the coding, ad targeting, and game engagement. Now, Capex eased after heavy early year investments, and shares are up 60% this year. And Tencent also launched TenPay global checkout to expand the cross-border payments for Wixit merchants.
Right then, moving on. Let's keep it with the earnings space. Now, Disney shares, they slid 7% after the company posted a mixed set of quarterly numbers. Earnings beat, but revenue missed the expectations. Now, Disney Plus added about 3.8 million subscribers, helping offset deeper declines in linear TV and weak theatrical slate. Now, Disney plans to boost its dividend and double buybacks for 2026.
All right, but with this, viewers, let's move on to another news flow wherein a good US-India deal is coming through for India, says President and CEO US-India Strategic Partnership Forums, Mukesh Aghi, in an exclusive conversation with my colleague, Sumita Karir. Let's listen into an excerpt.
We have a good deal, and it's a good deal for India. Today, India doesn't love me, but it's going to love me after the deal. So hopefully, it's a deal which is going to benefit India. But there seemed to be a lot of anxiety about the deal, which is understandable because you have the garment exporters, the shrimp exporters who are getting impacted. And so we got to protect those jobs. And so as soon as the deal is announced, hopefully you'll see the lesser tariff on Indian goods, so at least the exports can go up.
Absolutely, and this is something that the cabinet, India's cabinet also, unveiled yesterday, a package to sort of give relief and support to Indian exporters. But Mr. Raghi, I want to also get in your views on something that we've been gathering from our sources within the government. They seem to be stating that there is no further need of negotiations between India and the United States as far as a trade deal is concerned. We've also seen the US government shut down. Well, a vote has been passed on that front, so that is also going to be resolved. But in your assessment, given the fact that you've been observing the space for a very, very long period of time, do you think we will be able to announce a deal this year?
Well, you have to understand that India was the first country to bat on the deal part. And what we saw is the goalposts changing and the expectations changing from the US side. When I say goalposts changing, because every time the negotiator agreed on something, it'll get pushed back again, we'll get some more. And at the same time, what we also saw is that countries like Indonesia, Vietnam, they not only gave the deal, also they committed certain large investment into the country. So a simple deal with India was no longer attractive.
Absolutely.
And so basically, that's why I said the goalposts changed also. And the fundamental question you have to ask is when do you stop? And saying, hey, this deal is important, but unless we close it, we can't drag it on. And I think that's where India is at the moment, saying we have gone way beyond what we expected to do. And now the ball is in US court, and they have to go close the deal.
Absolutely, and both the governments essentially are working within November. They expected to close the first tranche of the bilateral trade agreement by fall, which is by the end of November. But we'll have to see whether that gets closed or not, because India has also indicated that we don't really work with any timelines, and a deal has to benefit both the countries, and we will be, of course, protecting our interests. But given by the kind of commentary that we've seen, in fact, Minister Goel has come on record and stated that the deal may happen tomorrow. It may take a couple of months, but we will be protecting our domestic interests, and that is going to be of prime importance to us. How are you, and of course, how is the overall business community really reading into these comments that have been coming off late as far as the trade between the two countries is concerned?
Well, every nation has to protect their own interest. And India has as much right as any other country. India is a sovereign nation, a proud nation, and it has to basically negotiate what's good for it and walk away was not good for it. So I think those comments are valid.
All right, so that's the word coming from Mukesh Aghi. But moving on, at the upcoming CII Partnership Summit in Vizag, Andhra Pradesh is expected to unveil 410 MOUs worth nearly 9.8 lakh crore rupees. That's promising to create about 7.5 lakh jobs. Sumita yet again caught up with Nara Lokesh, who's the state's IT minister, to understand the investments and more. Let's take a look.
Companies that choose speed are choosing Andhra Pradesh because speed of doing business is our hallmark. And that's our clear competitive advantage when I go pitch Andhra Pradesh to other companies. So if you look at it, that's why we've been able to land marquee investments across sectors, diverse sectors. And that's what again makes Andhra Pradesh very unique.
But you also spoke about attracting $1 trillion worth of investment. Have you given your team a timeline to sort of achieve that? And what are the key sectors in terms of investments that you're looking at for the state, especially when we look at the India story and the kind of policies that the central government is rolling out?
If you look at it, our clear target is 5 years. We have to attract a firm commitment of $1 trillion. That will enable us to get to being a $2.4 trillion economy. Parallelly, if you look at it, energy is a very important sector. Steel, electronics, manufacturing, of course, IT, data is another big sector. Medical devices, manufacturing, pharma, automotive, cement. So from traditional sectors all the way up to cutting-edge sectors, every sector is a play for us. And across sectors, we have built strong clusters where we have vertical and horizontal integration, where education plays a very, very important role.
Let's also talk about the kind of investments that you're looking at coming from India's neighborhood. You also mentioned during your presentation that, there will be representation from several different countries. Diplomats are expected. The Honorable Commerce and Industry Minister Piyush Goyal is expected. But what is your sense of the kind of investments that we can expect from India's neighborhood, given the fact that our ties with countries like China have normalized in the past couple of months?
I think it just started. A lot more will happen. Conversations have just restarted. So I believe that we are in the right direction. Yes, in electronic space, we are attracting investments. There are specific sectors, focus areas, and a lot of domestic companies that are also working on JVs.
We have to ask you this, since you are very passionate about entrepreneurs, and of course you want to sort of give a boost to entrepreneurs in the state. You have spoken about the $15 billion worth of investment from Google. You've also spoken about the additional $120 billion worth of investment that we're going to see. But where do entrepreneurs and small MSMEs, they figure in your plan of as far as investments in the state are concerned?
See, for me, Google is important, but equally a mushroom processor is important, or a banana processor, or a mango processor is very, very important. A lot of thrust is on MSME in Andhra Pradesh. So every assembly constituency has now an MSME park. So we have built it out. We are building the entire ecosystem that is required for it. And we are enabling entrepreneurs to come together. And we are going to create that entire ecosystem and make it very vibrant. So someone who wants a 500 square yard to all the way to about an acre of land, we'll be able to give even a plug and play, or if they want to build out their own facility, we'll be able to do that.
Mr. Lokesh, just one final question before we let you go, and I have to ask you this on the tariff scenario. The Indian government has indicated that it is bracing for any sort of scenario. A deal could be struck within a month, it could take a couple of months, but the Indian government is bracing for all sorts of scenarios to come up. We have, of course, presented a proposal to the United States. How is the state of Andhra? How are you sort of supporting businesses in the state in terms of a diversification per se?
If you look at it, Aqua is very large. We are only second to Ecuador. There's a 34% taxation difference, tariff difference between Ecuador and India in shrimp. So I worked with the entire industry. I said, how do I reduce your cost of production? And what is the role of the government in it? What is the role of industry in it? Parallelly, we are saying, okay, let's move up the value chain. So we've done shrimp, a certain variety. How can I do it better? So I'm working with James Cook University in Australia to bring them down, to do a center of excellence, research, and so on and so forth. That's one part. The second part, we have opened new markets. Ukraine, Russia, Australia has reopened now for us shrimp. So we're working across, we're looking at the globe and saying which are the countries that will consume, at what price point they'll consume. And I believe net, at the end of it, India will do better.
And as counting begins today for the high-stakes Bihar Assembly elections, the big question is whether Nitish Kumar, the state's longest-serving chief minister, will script history with a record fifth term or whether a change of guard is on the cards. Now, will Modi magic work again or will RJD's Mahagathbandhan will come back, stamping Lalu Yadav's legacy in Bihar? Remember, most exit polls gave NDA a clear edge over the Mahagathbandhan, but with several factors in play, 2025 could be one of Bihar's most closely watched results in years. And to understand more, let's go across to Pragya, who is reporting from the battleground, Bihar. Pragya.
There are the preparations that have been going on in BJP headquarters. They also are very sure that they are going to win this election. And in fact, if you can just see, there are some, the tents and the shamiyanas are all there. But I have been told by the sources that BJP would keep the celebration very low-key, considering there were Delhi blasts. And in fact, we have also been told that they have been given strict directives that there should be no, crackers that will be busted today. The mood is somber because of the Delhi blast, but yes, it is a huge victory for NDA if they come out victorious, and the NDA believes that they are going to win this election. But very importantly, Election Commission has also given some directives to everyone. In fact, this is very crucial for the opposition parties as they have been blaming Election Commission for vote chori and SIR. Election Commission has said that the ROs will be updating round-wise and assembly-wise results on their official portal, and everyone should refer only to that and not believe any of the hearsay, because only the verified information is coming only on the official website of Election Commission. So one sort of caution that has been given by the Election Commission, especially to those who are accusing Election Commission of being biased towards BJP and also playing in the hands of the BJP. This is also a cautionary measure that has been given from the Election Commission. But as you can see, BJP and NDA both are very sure that they are going to win this election. They have done their calculations and arithmetic.
All right, thank you, Pragya, for getting us the latest. Very interesting mood, but with a word of caution coming from the Election Commission of India. But there is one more player in the fray in Bihar. Now, would Prashant Kishore's Jan Suraj make a dent in Bihar politics? Mohit, my colleague, is here to give us insight into that. Mohit, over to you.
The future of Prashant Kishore and Jan Suraj will depend on the results. Now, according to the exit poll, he's getting a mere 0 to 2 seats. But if the vote percentage comes out to be in double digits, then in future, he could be somebody who will stay in Bihar politics for a long time. Now, as of now, according to the exit poll, Prashant Kishore is not doing fairly well. But Prashant Kishore was in Bihar for a long time. He took out Padyatra, and we also saw that how exactly he raised the issue of migration, he raised the issue of unemployment, he raised the issue of youth of Bihar, which in a way resonated with people in Bihar, specifically the youth. But whether that will convert into vote, that remains to be seen. So the future of Prashant Kishore, whether he'll be the kingmaker, whether he will substantiate himself as an alternative to the Mahagathbandhan and the NDA, all depends upon the voting share that he gets. If he gets the votes into double digits, I'm saying again and again, then he will substantiate himself as somebody in longer run who will be an important factor, a PK factor in Bihar politics. So we have to wait and watch what exactly would pan out, because I was in Sasaram where Kinnaur is, where the Prashant Kishore's village is. People were, yes, excited to meet Prashant Kishore. They were saying he has raised certain issues which were always neglected by the other political parties. He has raised issues about youth, development, but that transpires into vote or not, because politics is always about winning seats. If he wins some seats, he could be the kingmaker. But we have seen that how he has, from past many months, attacked the NDA government, saying that, and he in fact went on to say that the JDU will not cross more than 25 seats. So it is a very interesting competition. And as you were discussing earlier, Amita, too, today we also need to look on one aspect, that what exactly would be the strategy of the RJD, because yesterday the massive meetings took place at residence of Yadav. Mahagathbandhan leaders were there. They addressed press conference. They also stated that if anything wrong is being done by the officials, then they will have to bear the brunt.
All right, thank you so much for getting us all those details. It's going to be an action-packed day indeed. But time now to slip into a very short break.
Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Time now to take a look at how the Asia Pacific markets have opened up, and it's a rather sea of red on the Asia Pacific front as well, which is tracking losses from the Wall Street. Now, first up, let's put the spotlight on Japan's Nikkei, which is actually leading the losses on the Asia Pacific front. It's down about 1.5% right now at that 50,508 level. So yes, very solid downtick coming in over there for the Japan's Nikkei. Other than that, if we talk about China's Shanghai index, that's also trading lower, not very solid, very significant decline, but yet just 0.1% decline coming in over there. But yes, of course, trading with a negative bias at that 4,025 level. Hong Kong's Hang Seng, that is also trading in the negative territory. It's down more than 1% right now at that 26,790 odd level. So yes, red across the board is what we are seeing. If you talk about South Korea's Kospi, that's also trading just about 2% lower right now at that 4,000 level. So yes, that's about the major Asian indexes. Apart from that, ASX 200, Australia's index, that's also trading in the red right now, trading more than 1% lower. It's down about 1.3%. 8634 is the level at which the Australian index is trading. So yes, very a downtrend is what we are witnessing. But if you talk about the Nifty, we did end at that 25,879 level yesterday. And for today's opening, again tracking the Asian as well as Wall Street declines, we're expecting a start in the negative territory. About 100 points of downtick is what we are expecting. That's what the Nifty implied open is suggesting. So yes, Srishti, a negative start is what we are penciling in, but lots of stocks that we need to watch out for that are going to define the moment for the market.
Well, yes, it's the result action that we're getting to see on the markets. Kanishka, let's tell you some of the counters that we have been tracking. First off, with respect to the earnings, it's going to be Muthoot Finance that is going to be in focus. Company did come out with a very strong set of numbers. It's a beat all across the parameters. It's a big on the AUM growth, NIMs, as well as the credit cost as well. In terms of the internals, definitely the AUM growth was helped by the higher gold prices. And if we look at the numbers, NII has seen a jump of almost 59%, while it's an 87% jump when it comes to the profit number. So very good set coming in from Muthoot Finance. Midhani is going to be in focus as well, as the company did come out with its earnings, wherein they look little weak because the revenue has seen a slump of 20% YOY, EBITDA is down 33%, and even the margins were seen to be shrinking. NSDL, very strong set coming in from this particular counter as well. The revenue has seen a jump of 28% on a sequential basis. EBITDA has grown by 35%, while the margins now stand at 32% versus 30.5% in the last quarter. Let's shift focus on Relaxo. Weak set of numbers. It's a miss all across the board. Revenue down 8%. EBITDA did decline 7%, while the margins were seen to be a bit stable when it comes to Relaxo footwears. And lastly, Voltas, one of the volatile counters, wherein the top line has been a slight miss versus the estimates, while the margins and profit were sharply below the street estimates as well. The revenue has seen a decline of 10% YOY, while the EBITDA is down 56%. So that's about Voltas. Let's watch out for all the action in today's trading session. But which are the other counters, Kanishka?
Absolutely, Srishti, lots of other counters, especially from the auto sector. Earnings, many earnings that we saw yesterday after market hours. First up, let's start with Tata Motors CV. Now, remember, this is the first time after it has become a separate listed entity. The company has witnessed a loss this time around of 867 crore rupees. This is compared to a profit of 498 crore rupees in the same quarter of the previous fiscal. So yes, a downtick is what we have seen there. Revenue has seen a decent growth of about 6%. EBITDA again is down about nearly 100% on a year year basis, it has come in at 17 crore rupees. EBITDA margin, that too has seen a significant decline. It's down more than 960 basis points at that 0.1% level. So let's wait out for how the Tata Motors stock reacts to that, those numbers. Now, if you talk about Hero MotoCorp, again, standalone numbers is what we are looking at. It's been a decent sell. The company has seen a growth of about 16% in terms of revenue, coming in at 12,126 crore rupees. Profit too has seen a growth of about 15.8%. So yes, a good quarter coming from Hero MotoCorp. Now let's put the spotlight on Sagility. Now, it is being told by sources that the founder firm is expected to sell about 16.4% stake in the company. That would be worth about 2,176 crore rupees. So yes, we'll watch out for that. The offer price for the sale has been set at 46.4 rupees per share. So yes, let's see how the stock reacts to this development. Other than that, let's put the spotlight on the defense space. Now, Bharat Dynamics, yet again account in focus. Now, a very good set of numbers is what we have seen from Bharat Dynamics. Revenue and EBITDA have nearly doubled, whereas margins, they have sort of remained soft for Bharat Dynamics. But other than that, the company also announced that it has won contracts worth 2,095 crore rupees from the Ministry of Defense. So yes, watching out for that. Now, this contract is for supply of Invar anti-tank missiles for the army. So that's a positive development, while margins have remained soft. Otherwise, it's a good set coming from Bharat Dynamics. So most likely a positive reaction is what we might see. Other than that, there is Infosys, which is in the spotlight today. It's the record date for 18,000 crore rupees buyback. So yes, all eyes on that. And lastly, there is Eicher Motors, yet again an earnings counter. It's been a decent set. In fact, it's been a pretty good set for Eicher Motors. Profit has come in at 1369 crore rupees. That's a growth of about 24.5% on a year-on-year basis. The revenue too has seen a growth of about 45% on a year-on-year basis. So yes, a good set coming from Eicher Motors as well. But we'll watch out for how the stock reacts to these developments.
Indeed, a lot of these auto counters will be in focus, but moving on, and strengthening economic ties between Singapore and India has taken a major step forward. Now, the Singapore Business Federation, or SBF, has opened its 4th Singapore Enterprise Centre and its first outside South Asia, right here in Bengaluru. We bring you all the latest from the launch.
The new Singapore Enterprise Centre, or SEC, at Bengaluru that was inaugurated in the IT capital today will help Singapore enterprises, especially small and medium-sized businesses, tap into India's fast-growing economy. The launch was officiated by Ms. Gan Sia Wong, Singapore's Minister of State for Foreign Affairs and Trade and Industry, Ms. Shobha Karandlaje, India's Minister for Labour, Employment and MSME, and Mr. Priyank Kharge, Karnataka's Minister for Electronics, IT and Biotechnology, as well as Rural Development. It is a part of the Global Connect at SBF initiative by Enterprise Singapore and the Singapore Business Federation, which supports companies in international expansion through advisory, networking, and business matching.
As you are aware, internationalization is never easy. Getting the right connections, understanding the regulatory frameworks, and basically taking that first step into the market is important. And we feel that while we have been assisting a lot of companies, Singapore companies, to establish here in India, nothing beats having a presence. And this presence basically signifies the build of the corridor between Singapore and India, and streamline all business connections, all business discussion as far as we can, to bring business forward. Of course, while we establish our center here in Bengaluru, our coverage, our assistance to the Singapore companies is pan-India.
India, now the world's 4th largest economy, is expected to grow 6.6% in 2025 and remains Singapore's largest source of foreign direct investment for the 7th consecutive year. With business interest from Singapore companies rising steadily, the new centre aims to engage over 470 enterprises in the next 2 years through trade missions, seminars and market programs. The event also saw the introduction of the SBF India Business Committee, chaired by Mr. Prasoon Mukherjee, Chairman of Universal Success Enterprises Limited, which will serve as a strategic bridge between the business communities of both countries.
CC Center we can connect in a very big way to access to all the companies, big, small, large, medium, every company, Indian companies can get an access to Singapore companies. And then that can really bridge, partnerships. And what I can also see is that we can tap on to each other's strength. India has manpower. India also has some land, more land than and it can also give a lot of technological and intelligent support. Singapore can bring in newly innovative products, and it also can bring in capital, to really partner. And we can really, in that way, merge or can help each other entities and make our both the sides companies successful. And the larger companies have a lot of access to many things, but the small and medium enterprises have very few access. And so in that way, I can really say that this will be it will really help the small enterprises who really cannot go to approach the Singapore big large entities. They can come to the SEC center and they can be helped to access Singapore's strength.
The opening of the Singapore Enterprise Centre in Bengaluru reinforces a partnership built on trust, innovation and opportunity, paving the way for a new chapter in Singapore-India business collaboration.
I thank you for your decision for opening your office here, and trust me, it's a vote of confidence in our state's potential, and we assure you policy support, talent, infrastructure, and more importantly, like you said, the spirit of collaboration and trust. That is something that will be setting in stone for you in a world defined by rapid change and cross-border dynamics. Physical presence still matters. Like you rightly pointed out, trust still matters. Partnerships still matter. The Singapore Business Federation's decision to open in Bengaluru is not a small step. It's a bold stride towards a more integrated, future-ready ecosystem for businesses. And I'd like, on behalf of Government of Karnataka, I'd like to thank you once again for your belief in the Karnataka growth story.
With stronger institutional ties and on-the-ground presence, the Singapore Enterprise Centre in Bangalore is set to serve as a bridge for deeper collaboration, powering growth, innovation and connectivity between Singapore and India.
As both countries continue to expand what they call a very close tie here, we'll really have to wait and see the kind of impact now the SEC is going to have globally as well as far as India is concerned. In Bengaluru, with journalist Pradeep, this is Neha Bali for ET Now.
Time now to slip into a very short break.
Welcome back to Market Cafe right here on ET Now. And healthcare space Sagility plans to sell their shares up to 16.4% in the company through a block deal. That's one of the big stories that we have been tracking this morning. And let me take it across to my colleague Anurag Joshi for more details on this one. Anurag.
A firm controlled by the promoters of Sagility is planning to sell shares in a block deal on Friday. The firm Sagility BV plans to sell up to 16.4% equity stake in the company. IIFL Capital Services is the sole broker in the transaction. And if you see the offer floor price, that's 46.4 a share. The base offer size is 469 million shares. That's 10% of the total outstanding shares of the company. 2,176 crore rupees, which is $245 million. There's also an upsize option of up to 300 million shares. That's 6.4% of the total outstanding shares, and that's 1,392 crore rupees, $157 million. The books are opening tonight, and this transaction is closing on Friday.
Right, thank you, Anurag, for getting us those details. But let's move on. A global logistics company, DHL Group, has announced plans for investments of 1 billion euros across all its business units in India by 2030. My colleague Anjali Palot caught up with Tobias Meyer, who's the CEO of the DHL Group, to know how their key investments are going to be done across categories and the roadmap ahead. Let's listen in.
a very substantial amount of that is coming to invest in Blue Dart because we are a large organization. We have a very wide spread. So we cover 55,000 locations in this country. So obviously the investments, then the type of investments in large, hubs, very large hubs to take care of scale, things like buying aircrafts, these are big investments. So a very substantial part will come to Blue Dart, yeah.
Yeah, you've mentioned that a lot of your further expansion, like we're seeing overall in the e-commerce market, is coming from smaller towns, tier 3 plus. So when you expand in these markets, how does your strategy differ? Are you looking at similar sizes of warehouses, or can they do with smaller warehouses just to make sure you reach more places?
Yeah, very good question. So particularly in e-commerce, the method of distribution is very different. So you might need a smaller premises, smaller number, a lot more affiliations with local players. That's how we can reach those locations to the foot of Himalayas, but with the right kind of service quality. So we do have smaller, hundreds and hundreds of smaller footprint offices to cater for smaller volumes. Okay. But as they grow, we also, so that's an evolving space where it was small, but because the flows increased, particularly e-commerce and ground, we have to take larger premises. So I think that's an evolving space right now.
Another trend that is coming up in the e-commerce space is a lot of the players at this scale look at in-house logistics and in-house warehousing. Now, DHL has been a player, Blue Dart has been a player that has been largely been the outsourcing partner for them. How significant or how crucial do you think this shift is for Blue Dart to track, and is it posing a significant challenge to you?
Not really. That's the how the marketplaces want to control every consignment more for customer experience. But we are very happy with the outsourced part of the business because we are able to get a very good slice of it.
Okay.
So as the pie keeps growing, even if the outsource is a specific percentage, it still plays a very vital role. Within that also the volume is quite high.
Okay.
But it is also an area where you need to give specialized services, etc., which the market players may or may not give. There could be a speed element which is better in that niche. So we are very happy in that specialized place to grow. And I think this is not too many players who insource. They are large market players who insource. The rest of them have to outsource. So the outsourced will keep on growing.
All right, but with this, viewers, it's once again time to slip into a very... And today, all eyes will be on select auto companies on the back of their earnings. And firstly, let's deep dive into Hero MotoCorp earnings. This time around, a steady set coming in by the company. Majorly, all the numbers were in line to what we were expecting at TT now, and especially the margins. It's a 15% what the company has reported in terms of EBITDA margins, bang on in line to our estimates. So good set, what we can call it, from Hero MotoCorp. The company is also highlighting the fact that their ICE Vahan registration has seen a surge of 16.2% versus industry growth of almost 14.7%. The EV business has seen a record market share as well, and along with that, the company has made new launches at EICMA 2025, so they are positive on that. The global dispatches has seen a surge of 77% in the quarter gone by, definitely outpacing the industry by almost a 3x growth. And along with that, it's Vivek Anand, who's the CFO of the company, highlighting that the growth momentum is likely to continue. The GST reforms, macro tailwinds are at play, and the ongoing investments will be there in tech, global markets, as well as innovation. These are some of the key focus areas when it comes to Hero MotoCorp. But 10:30 a.m. is the con call today, so we will watch out for more commentary on their guidance and their outlook going ahead. That's about Hero MotoCorp. Let's watch out for this two-wheeler major. But along with that, within the commercial vehicle basket, it's Tata Motors that has come out with its earnings. A good set, rather, what we can call it, from Tata Motors this time around. Because remember, post the demerger is the first time that the company has been reporting its numbers majorly in line, while the profit has been marginally better than what we were expecting at ED now. But if you look at the adjusted profit, that number is slightly higher. That is around 1,345 crores. crores versus 676 crores same quarter last year, because there is an adjustment of 2,355 crores relating to the mark-to-market losses in the Tata Capital. So post-adjusting to that, the profit figure will be higher versus the street estimates. The highlight remains that the volumes have expanded smartly to 12%. But in terms of the outlook, the management is positive that the second half of the fiscal is going to be better than the first half. And along with that, the growth momentum is likely to continue as the CV volume is likely to grow in the high single digit is what they are anticipating. The exports have been doing well. They have recovered to the pre-COVID levels. The parts and the services, international operations, they have recorded a double-digit share in their overall revenue, while the approvals for the Evoco acquisition that is expected by the end of FY26. So that's about Tata Motors numbers this time around. We will watch out for all the action on this particular counter. But with this, let's also hear out what the management has to say.
I think our reported profitability at a console level was impacted by a non-cash charge of mark-to-market, which is purely an accounting for the investment that we had done in Tata Capital. And this, after listing, the price had been lower than what the initial valuation was. So the mark-to-market adjustment of 2,000 crores is what is caused the loss at a console level. But if you look at the underlying PBT and the net income, both remain strong at 1,500 crores and 1,200 crores respectively. But coming to medium and heavy commercial vehicles, I think it has had a secondary impact wherein due to the GST rate reduction, as consumption of various items increased, it called for higher freight being transported on the road, which led to improved utilization, and therefore this will now lead to a cascaded impact in terms of higher demand.
All right, edition of Market Cafe. Srishti and I will take your lead, but don't go anywhere. The market will take all the action forward.